Hey everyone, I hope you're having a really good weekend and week, whatever time you're listening to this. Today I'm going to talk about something that we're seeing a lot more of occur throughout the financial markets and the Bitcoin space overall. I'm going to talk about my thoughts and reviews of the Bitcoin based lending programs that are being offered across the markets right now. And as many of you guys are aware, we're currently in the phase of Bitcoin called the financialization phase. So we're starting to see certain things get financialized, such as these indirect ways to buy Bitcoin through stocks, through these bond products like STRK. You're also able to now borrow in certain cases against your Bitcoin based on if you have enough collateral, or if you have enough Bitcoin, you can actually take out a loan against your Bitcoin. So we're currently in the phase of the financialization. And for good or for bad, with Bitcoin, these products are coming out on the market more, and they're starting to roll out a lot more frequently. And I actually kind of look at it as a net pro and a net con, a net disadvantage. And I'll just share some of my thoughts. You guys can agree or not, but here's my two sats. So Coinbase, Lendin, Aave, Strike. There's going to be many others, guys, beyond these. But a lot of these guys are coming out with products where you can essentially give your Bitcoin to these companies, and essentially they will give you a fiat dollar amount loan, essentially, and they're going to hold your Bitcoin as collateral. What will end up happening is over a period of time, or over a year, you'll actually end up paying that loan back, and you're essentially getting short-term cash. So because a lot of Bitcoiners, they have a lot of their money tied up into Bitcoin, but they can't really do anything with it. They can't buy a car, they can't upgrade their lifestyle unless they sell their Bitcoin. So what Strike and many others have created is these products where you can tap into the wealth of your Bitcoin without actually selling it. And I kind of look at this as a good thing, because at the end of the day, what good is money in our life if you can't enjoy it, right? I mean, far too many people, they die with millions or hundreds of thousands of dollars, and they don't even get to enjoy their own money that they've worked so hard for. And so these products offer that alternative way to get you access towards your life energy. And I think for that alone, I am pretty impressed. So, I can go on for days about the pros and the cons of these products, but I'll just give a high level here. So some of the things to keep in mind is Bitcoin is extremely volatile. Like, you guys witnessed it the other day. It was 108,000, and within a few weeks it went down to 74,000. Just a few weeks. That's a huge downswing. And I understand that with that downswing, many people are like, oh, whatever, like, I've been through worse. But like, for people that, a lot of people, they don't like to see drawdowns that big. Most people, like 99% of people, even I don't like to see huge drawdowns necessarily. Obviously now I have a long time horizon, so it doesn't matter as much. But like, for most people, you don't want to see these big drawdowns. It's really scary. So Bitcoin's extremely volatile. And if the price were to drop beyond a certain point, and you don't post more capital or collateral, you could actually lose your Bitcoin with this product. Now, I haven't looked at the details of the Strike or the Coinbase, but essentially, they're giving you a fiat loan, and let's just say you post 2 Bitcoin, they're going to give you 100,000 in cash, and so essentially, that is about, they're giving you the LTV, loan to value ratio, would be what, 50%, right? So you'd essentially be getting 50% of the value of the Bitcoin you're posting. So the thing is, there is risk with how volatile Bitcoin is. There's been situations where Bitcoin has dropped 70, 80%. Look at 2021, 2022. It dropped from 69,000 to like 15,000 in a very short period of time. So please keep that in mind. And, another thing is, understand that you can get a fiat loan without posting your Bitcoin. So just think about this for a second. So you can literally go to LendingTree lending club or your bank, and you can get a 7-8% loan. And this is a fiat loan, 7-8%. So, and you're not going to lose your Bitcoin. I'm not saying you should do that, but I'm just saying that there are alternatives. You're posting your hardest asset, the hardest asset in the world, up just so you can get a little bit of fiat cash. I think this is a great product for those who have 50 plus Bitcoin. But for most people that have 1, 2, 3, 5, I don't know, man. I don't know if it makes sense. I get why they're offering it, because nobody wants the taxable event, but the fees are high, right? So that's something to keep in mind. So, because you don't hold the private keys, if something were to happen with the exchange where you're borrowing, or something were to go bankrupt, we saw in 2021 with the Celsius crash, we saw it really go down back then. Just keep in mind that when things break in the system, if you don't hold the private keys, as we know, not your keys, not your coins. Look at the FTX, the Celsius, you name your exchange that went under, the BlockFis, you're SOL. You're out of luck. So you got to ask yourself, does the platform hold the Bitcoin 1-to-1? I would say maybe Strike and Lendon do, Aave and Coinbase, I don't know. But you got to read in detail what these products are, because if you post your Bitcoin, you don't know if it's going to be there at the end of the day. It could. The emperor may have no clothes, right? So the truly worst part about these products, in my opinion, and I get why they're like this, but the truly worst part about these products is the interest rates are super high. I mean, I was shocked to see 12%. Some of them are 13%. I think Coinbase's is pretty low. It's like 5-6% or something. But with Coinbase, you're using wrapped Bitcoin, and that's on the Ethereum blockchain. So you're not. I think you would have to record a taxable event because you're swapping from one coin to another. Anyways, with that being said, the rates are really high, and Bitcoin has a great CAGR of 30% compounded annual growth rate, but that really eats into it. I mean, that really eats into your CAGR if you're taking out these 12% loans against your Bitcoin. So keep that in mind too, that you can probably get a better rate, interest rate at like 6-7% maybe, with a fiat loan. And here you're getting a 12% loan just because it's Bitcoin, a Bitcoin product. And I think a lot of it's because it's Bitcoin, right? It's riskier. It's a lot more volatile. There's a lot more risk with the lending on these. So that's why the rates are much higher. But just keep in mind too, the average S&P return is about 7%. And, a 12% is pretty, it's really hard to out earn that yield, to be honest with you guys. That's a very, very high yield. So just keep that in mind. And, I think there's a lot of pros to this product. And I know I've been kind of talking bad about a lot of them, but I'm just going to get into the pros now. And I'll tell you, I like the fact that there's no credit check. With most fiat loans, you're going to need to get a credit check. They're going to check all your assets, what's your loan to value, all that. No, you just post, it's a collateralized loan. So that's why they can charge a higher percentage, because there's literally no credit check at all. They'll take your Bitcoin though if you don't pay your loan, but there's no credit check. So that's the first thing to keep in mind. And, they're fast and accessible. I can literally do it right now and get like $100,000 cash if I post a few Bitcoin. Instantaneously. It's fast. And so I really like that fact of like, okay, I need to get a certain surgery, or like my life is on the line here and I need this money. This is an alternative or an option to do that, even if it's high. And you could probably pay off the loan early, so you're not really feeling that 12%. So if you're in a crunch for cash, this could be a good option. But still, assess your options. Nobody should be paying a high APR for their loan. So the thought, though, is that like why people would go towards these is there's no taxable event until you realize your gains, so you don't need to sell your Bitcoin. The thing though is, it's like, why don't you just sell your Bitcoin, right? If you really need to, just sell a little bit. You don't need to sell a lot. And the theory is that Bitcoin's price will go up even faster. If you end up selling it, you're actually missing out on upside. So that's why these products are offered, because you still hold the Bitcoin. It's just posted in collateral for your obligation on the loan. So I do see why this product is offered, and it's going to be helping a lot of people that have a lot of their wealth in Bitcoin. But at the same time, keep in mind that this product really isn't for everyone. I think you can choose to not go for it, or you can choose to do it. It's up to you. So, by not selling your Bitcoin, the HODL strategy, you're likely to see a lot more upside if the Bitcoin's price does increase. And I think it will. So I don't think it's good to sell your Bitcoin right now, even if you want to fund certain things in your life. I think it's better to just hold and try to earn more money. Try to take a second job. I still think, Bitcoin's price overall, it's pretty high compared to where it has been historically, but I still think it has a lot of room to run if we're going through a bull market. Now, if we're at the end of the bull market, or we're going to go through a recession or depression or whatever, who knows? I'm not putting my finger on anything here. Things can go down, but I think that by not selling your Bitcoin, you're doing a big service to your portfolio over the long run. So overall, I'm really excited to see these products in general, because I think these products are going to kind of be offered by banks in the future, and the rates will get lower. And eventually we're going to see the rates become even lower than a fiat loan, right? So, it's just going to take time, and I think it'll take some getting used to. But in the long run, I think Bitcoin-based lending is just at the forefront. I think that's why the rates are high, and I don't think it's going anywhere. So I think it's time to learn about it and just see, is it for you? And if not, you don't need to go for it. For me, I'm not going to go for it. I think it's cool they're doing it, but it's not my cup of tea right now at this point in my life. Anyways, guys, if you enjoyed this one, please click the links below. Please also feel free to share it if you liked it, and I'll see you guys in the next one.